Hello and welcome to my big picture video. I'd like you just to let me know, give me some feedback on this. I've been looking at giving you different formats and over the months, and it's important to understand what you find useful as well as what I know is useful, but a lot of people tend to either forget, don't even bother looking, or they're forget all about it. And it may be that we need a summary note on there somewhere, but for now I'll do this update as I see things are at the moment. Now I'm going to start off with looking at the euro dollar. I'm going to look at a couple of different things. I'm looking at the fundamentals because they're important, because the fundamentals are key to bank rates and what the banks do. So the fundamentals are leading leading what's going on here. The banks react to the fundamentals of the country. So it's a reactionary thing in order that they may slow it down or increase growth, whatever it may be. And then we'll look at what the large sentiments do. Now the big money is generally more on the right side than the wrong side. You can look at it historically, and historically it will show you that. The one thing the big money has the potential of doing is to sit there and be wrong for quite a bit of time, but it eventually comes right for them, so they can be a bit early to the case. And it doesn't really matter because they've done their analysis of up here, and they eventually everything runs over to be right. So we'll look at what the big money's doing. We'll look at that using COT analysis, but I'm going to just give you some numbers. I'm not going to drag you through it because a lot of you, I think, don't really fully understand it. And then we'll look at these technicals and what the technicals showing us. So there's the three things. I do this, I've done this in the past, and this is the way I like to look at things. This is the way we're going to run through them at the moment. Now, there's no great surprises. There's been a slowdown in growth in the European scene for a long time. Inflation's never got anywhere near pushing any risk of interest rate increases. In fact, all that's happened is they reduced the amount of bond buybacks, etc. But that's then been subsequently changed again by the central bank, which has needed to start stimulating things again and start looking at ways that they can actually help. But as it's basically got a negative interest rates, it's not going to be in cuts of interest rates, so it's only in bond buybacks, etc. That it can do to stimulate things. So things in general are pretty rank from both fundamentally and obviously the bank's outlook is they haven't got a lot to do or to be able to do things with. There isn't like they've occurred a series of interest rate increases which they can reduce to stimulate things. They are at rock bottom of interest rates, and the only thing they can do is make them more negative. But they're in the same situation as we saw in Japan. And I've seen in Japan for many years where there's no inflation or little inflation. Inflation's dropping in high level terms, and there's not a lot they can do to stimulate things here at all. So that's where they are there. Now, sentiment wise, what's happening? Well, sentiment's coming off on the euro, unsurprisingly. Both asset managers and hedge funds are selling off as well, so it's basically we've got something that's all aligned here. Basically we've got a technical picture on the weekly basis which is down. We've got the banking and economic and banking sector which is down, so we've got everything aligned towards the downside. So to me it would suggest that any rallies, well, like we're seeing at the moment, give us opportunities, and I say like we're seeing at the moment. Let me just move my pen out of the way, and this is a weekly chart, and you can see we've actually done probably more in scope to this week or today, the first day of the week, than we've saw all of last week. Absolutely awful markets, and there you go, there's the big green bar relative to everything else, and it is just coming up towards its monthly pivot. There were some signs at the lows here of divergences on the lower time frames, etc. But reality is, any rallies on this, and it may be a bit too early, but it may be worth waiting. But any rallies in this are well worth waiting to sell into, or worth trying to sell into, particularly on the short, medium time frames. Okay, That's the euro dollar. Right, pound will zip through this now, because it will all be easy, he says. Net position on the pound, it's interesting in terms of looking at overall what's going on here. Well, the bank last time was they were talking and looking at some of the numbers. The numbers have been okay-ish. Now they had been outperforming the Eurozone in quite a lot of different ways. Interest rates, well, we saw a slight increase, so we've seen interest rates pitch a little bit, but it's all very neutral, and that's pretty much what we're seeing there. In terms of what the big money's doing, the cotton, from the cotton analysis, asset fund managers, they're starting to get bearish, or more bearish, should I say, which is quite interesting, because there's a conflict in this case, that we're seeing the hedge funds becoming a bit bullish. Now this may be because the hedge funds tend to move a lot quicker, and they're thinking, well, actually we'll take advantage of these movements, and this is what they were seeing. They hadn't seen the last couple of days, and this is a report of last Tuesday. That may have certainly rolled over that bullishness, and we might have seen quite a change in that as we come into looking at the figures next week. But I'm looking at big picture-ish. It's neutral to bullish. It's from that point of view as well. It's more erring on the bull side than it is anything else overall. For a currency that's effectively being dogged by the likes of the Brexit issues, it's done pretty well. The potential, technically, it's looking like we're sitting in with a load of lower highs, and there are a couple of lower lows there. And to me, I'm just thinking this looks like it could doodle off back south. What could change that was some sort of agreement on Brexit, whatever it be, something sorted out. But at the moment, it's so. In summary, what I'm trying to do here is that there's conflict, if you like, in the bigger traders. There's certainly a sign of flatness to slowing down at least, and in fact some slight contraction in the numbers. So it's erring towards the downside here, and certainly technically we're seeing an err towards the downside. Now if I just get rid of the pen and come back to the weekly there, and if we can come back to the weekly, it'd be good. There we go. The weekly is really showing what's actually happening in terms of the way it's just chopping there backwards and forwards on the weeklies. Which way? Well, if it starts breaking down these absolute lows here, well, I would look back towards the lows of the bodies at least. Back down towards 126 wouldn't be a bad area in terms of where price could come off to. However, it's consolidating. I mean, at the moment it seems to be pitching up for a week and down or whatever, but if it can pitch up back towards the highs of the last week or the week before, well, who knows, it could be still heading towards that weekly 200. It could be a change of things, but it is, to me, it's the bias should really be we're looking maybe towards the downside, with further downside there. Flat to down is the picture for me at the moment. Dollar yen. Did I say that was going to be quicker? Here we go. Dollar yen then. This has made life easier for me, he says. Generally, though, for a long time, there's no chance of interest rate increases. The risk I always talk about with the dollar yen is safety. It's seen as a safe currency, so be aware it's seen as for safety. So that's always a risk. If things start going a bit wrong in other locations, we could see the dollar yen strengthening or coming down on this particular case when I say strengthening, as the yen gets stronger against the US dollar. Fundamentally, there's nothing to be happy about. I can see there. Japan has shown all the signs of slowing down, just as China, US, etc. So it's a cold that everyone's got at the moment. Bank-wise, there's no way they're going to be increasing rates, and there's very little scope to do things to really get liquidity running and movement. So it's between a rock and a hard place. so it's left to its own devices largely. Sentiment wise from the big boys, we're really seeing a bit of a mixed bag, but overall it's negative. For in other words, negative read, upside for the dollar yen. So have to be a bit careful how we do look at this. Negative banking fundamentals, negative banking, and negative COT effectively results in upside on the dollar yen, and that's what we've got the potential for here. Let's get rid of this, just come down to a daily picture here. It's been dancing all over the place. I keep on about my trend line here where it could well, it's come back to its weekly pivot, tested that, and it could continue in that upward trend. As I said, the main factor that may change that is risk. Aussie dollar. The Aussie dollar now, so it's well, I'm starting to go to technicals before I really talk through the fundamentals. What can go on here? It's been a bit of a mixed old bag in terms of numbers, but mainly risk to the downside. The banking sector is talking, the central banks are talking about possible cuts in interest rates, which could stimulate and eventually help the economy, which eventually will be pushing up. That is being obviously priced in, because it's not only me that knows about that. Sentiment wise, the big money, the asset money is negative. It's slightly, well, it's a negative situation, but slightly fewer negative situation, but overall let's just refer to the sentiment as negative. And when you look at this weekly chart here, well, it's still pretty much in a negative sort of scope here. It could flatten out more. It's not in some respects as bad as some other, well, certainly not as bad as some other economies. Could do okay. There's always that risk it could just pitch out through the highs here technically and push on upwards a little bit here. And again, if we see oil pushing up, if we see the raw materials pushing up, it could certainly benefit from that and run with it. So there is the chance of upside. My bias in terms of would I want to be buying it? Not really. I'd rather be selling it from the evidence we have. Canadian dollar, well, I've slipped onto a daily page here. Let's go back to look at it from a weekly. I'll click on that weekly page if it'll let me, would be good. There we go, a weekly page. And it's another one of these consolidative factors. In some ways it's a bit like the pound without Brexit. Some of the fundamentals were quite good, but of late they've come in a bit weaker. It's caught the same old cold as everyone else. It's got scope for pushing down. Bank rates, well, the fundamentals are slowing there. The bank rates are not necessarily going to be increased now. They're not necessarily talking about cutting either, but certainly not talking about increasing. So we got this sort of more neutral basis from the bank rate, as I said, sorry, fundamentals slightly to the downside, and then we look at the sentiment from the Canadian dollar. And really it's a net negative position overall between the holders of the contracts, futures contracts there, and it is a down on in terms of individuals, looking at the asset managers and the leverage managers. So they're both bearish. So overall, I say they're both bearish. Actually, I tell a lie there. Actually, the asset managers are slightly bullish. They're slightly bullish in their holdings at the moment, but dropping down, reducing. Now this obviously turns around because it's the US dollar, so again we would expect from that basis upside on the dollar, US Canadian dollar. Whether it will continue doing that is another matter. I'll come to the big thing in a moment in terms of the US dollar. So for now this looks, well, if anything, to me it's got possibilities. I've just drawn that line roughly across the lows there. It could carry on breaking to the downside. There are possibilities, not fantastic, and the risk is always back. Another bit of bad news comes out and it flies back up again, so we need to just bear that in mind. Okay, So that's where we are with Canadian dollar. Quickly onto the New Zealand dollar. Sorry, I'll look at the Canadian dollar if I can on the weekly. There you go, just see how choppy it is. Let's go and have a look at the New Zealand dollar then. And the New Zealand dollar, well, it's broken out of its weekly wedge here. I drew on and never actually sent the recording out. Broken through on that, looking bearish from a weekly point of view from that aspect. And fundamentally, as we run through, same things. The fundamentals are coming in weaker. The banks are talking of cutting rates to try and get things rocking and rolling. So that's why we've seen this movement coming down here, particularly on this day. The sentiment, there was some positives, positive holdings from the asset managers, but that's dropping, and the leverage are already negative. So, and they're negative by more. So the sentiment is negative, and at the moment, and the short term at least, the trend is negative. So again, things pulling back to the weekly pivots, and that I would suggest it's good for a sell point. Right, that's that. Let's have a quick look at the S&Ps. Now, I keep getting the same old questions on this, but I don't blame you. I would ask, can it keep going up? Is the question that we're seeing all of the time. And as I said many a time, yes. Where else are people going to put their money? Now, there's got to be a limit, and I'm sure there'll be a limit, and there'll be the sort of people looking at these prior highs here and wanting to think, well, if it pushes into that area, we'll sell into that. I think you've got to look how strong this has moved up here. I say strong, it's on a weekly chart, but it's very little. 1 week of a proper retrace, the rest of the time it's been just pushing up there. Why? Because people need to get returns on their money. When I say people, I'm looking at asset managers, etc. The big money needs returns. Where else is it going to get returns when interest rates are still historically massively low? Now, I know that Trump is pushing on for dropping interest rates in the US to get things moving. Well, what will that do? It'll push the S&Ps up further, most likely. So it'll only be more bullish. In fact, the whole way this has been pushing is on the fact of low interest rates. It's feeding. Low interest can create a boom here. Now, will it crash at some point? Sure, it's eggs it will crash. But when? I wouldn't want to be on the first one to be, and we don't need to be the first to be trying to short it. So long as it's going up and it's within a smidgen of its previous highs there now, I would let it be a watcher. Maybe buying, if you're really wanting to trade this, buying into retracements. On the maybe on a daily point of view, you can look at some of the retracements if it will move. Let's just there we go. To pause it to get into the dailies. The daily days bar movements are pretty slim really, but they're still moving up, and it may give a bit of divergence across there. I don't think it's the most strongest of all moves there, but as I said, the retracements have been pretty slim from that move down in late 2018. And sentiment wise, the sentiment is pretty much increasingly bullish from institutional money, the large asset managers, institutional money. It's been increasing. Yeah, they've taken a few more short positions, but they're increasing again the positions, long positions they're holding. And okay, as ever, the short positions are starting to increase from the hedge funds. They've been short on these markets for such a long period, and this is the one market that the hedge funds seem to get a bit wrong. But it may be they're wrong on their future holdings, but they may just be hedging, doing what hedge funds should be doing. Maybe there you go, maybe not. Anyway, so that's where we are with that. I think there's more bullishness. I've seen many a quote around the US dollars about time it rolled over, and yeah, in some respects it should do, one would argue. However, when you've got an economy that's probably doing slightly better than everyone else is, why would the dollar then be sold off? And there's at least they've got potential to reduce interest rates. There's some scope there, as has the UK, but less scope. And the likes of the as I said, Australia and New Zealand are looking to reduce interest rates, so they've got scope. There's scope to be done in those countries, and which it may actually generate a little bit more momentum for those particular economies. So where the scope is, that's really got the slightly better position. Europe is rotten at the moment in lots of respects, including German banks. Real struggle there. So, to me, I find it hard to be anything else but sort of bearish on the euro, and it's the main competitor to the dollar at the moment. So, in summary, I think I don't think we'll see a straight line with the dollar for now, and I think there'll be more consolidation, more periods where we see chop, and quite naturally, because there isn't a clear winner, or there is one that's clearly got more scope to do things than others, and that'd be the US dollar or the US economy. That's it for me. Have a great week. Bye for now.